Hey there, people. Hope you're doing great as always. Let's take a look at some of the news together: investing, business, stocks, everything. So basically, the market this year has been merciful on us so far. S&P 500 up 11.77%, Nasdaq 26%. And despite, we had some obviously government shutdown and, different kind of theater over the weekend, this morning market opened relatively nicely. So yeah, let's get into some of the news, shall we? So first big news of the day: Tesla missed their delivery numbers by not a negligible number. That being said, obviously that's the headlines, right? Hey, miss with the Model S and X, miss with the Model 3 and Y, total miss. Hey, it's 20,000 cars that were not produced, not delivered. The world is ending. Well, quarterly numbers, nice to check with the company how it's doing. And, you should take a look at all of your position whenever there is a conference calls, right? See if the story is still intact. But don't get too caught up with, quarterly numbers, right? When you a little bit actually zoom out, you actually realize that so far this year, we are just, 3 out of the 4 quarters in, and the Tesla already produced more cars than for the whole last year. So, we might expect to be somewhere here by the end of the year, because also the only PR guy for Tesla, Martin Viecha, basically reiterated that they are targeting 1.8 million this year. The target remains unchanged, so and they are still pretty much on track, right? They just need to do around 470,000 for the last quarter, so nothing too crazy to do, and I'm pretty confident Tesla can do that. Of course, in the short term, Tesla is in a precarious position, right? With the interest rates where they are getting a new car, it's just crazily expensive. So if you are in Tesla, definitely expect a rough time for maybe some time. And actually, if you look at the Tesla stock chart for the past almost 3 years, it's been relatively flat. Tesla is very volatile stocks, but all in all, it always goes for like this super quick run. Back in 2019, it did a kind of like a 3x in a very short time, then a 7x. In the meantime, it got cut in half some of the times, right? Last year it got also cut in half and basically doubled this year again. So, like some of these stocks, and Tesla especially, right? That's type of the company that it's just better to put it in the filing cabinet. The company has such a strong long-term vision that's going to get executed. I don't know about you, but I'm almost done with the newest Elon Musk biography by Walter Isaacson. And I mean, I knew a lot about Elon Musk, but the guy is just freaking insane. Like, the guy is hell-bent on making this all work. So when you're investing in a company, you have to realize that you are tying your future with that particular company, with its CEO, the C-suite, and every single person that works for that company, right? And knowing that Elon and all of those people on Tesla in the production line essentially work for me, that makes me sleep very well at night. So, Tesla is my second biggest position, and I'm not planning to change that anytime soon. So, zoom out, stay calm. That's my whole shtick. And kind of like a cherry on top, the Cybertruck is obviously going to get to production very, very soon. Probably going to have some deliveries, maybe in this quarter, latest maybe next quarter. Let's see. It's always a little bit jumpy with the timelines and Elon. But with the whole strike of the basically workers of the legacy automakers, GM, Ford, it seems like the Ford is basically canceling all the Lightning EV orders across the country. Like, basically, and at this point it's pretty much seems like those rumors are almost confirmed that it's really widespread. So, I mean, just in time to clear the path for the Cybertruck. And of course, I somewhat understand because, like the leadership for those legacy automakers, they're stuck between rock and hard place, right? So, they obviously have the workers on one side who just demand, more money, less work, but at the same time, they are just being freaking squeezed their their margins are non-existent for the legacy automakers, especially for the EVs, right? They just don't know how to make them as efficiently as Tesla, so they are mostly losing money on all of those. So it looks like, unfortunately, EVs are going to be sacrificed, even though, I mean, Ford Lightning, it's not a bad car per se. Obviously, it's not Tesla, but I mean, from what I've heard, it's decent, right? It's a car, it's electric, it's a well done, not Tesla, but a well done car. So let's see where this pans out. And another contender, obviously, for the second place, let's say, Rivian at this moment loses around 33,000 on every vehicle it sells. So, and again, Rivians, great cars. I'm hearing lots of positive reviews, and like the people seem to be in tune with the aesthetics. Like, if there was, if Tesla wasn't an option, like, the Rivian is also a very decent vehicle, right? But they are still burning through their cash pile and trying to make it into some reasonable numbers, so they are actually making profit. And if I had to bet, I think Rivian might be actually the one that's going to pull it off, because I mean, they kind of have to. They are pure electric maker. They have that focus on their trucks, which is a little bit of an advantage. They just are also in tough environment, considering the economy and everything. Because what was actually working out nicely for Tesla was that when Tesla was going through the production hell in 2018, 19, it was, zero interest rate environment basically. So, lots of these cars there was a lot of demand for them, right? So, Tesla is definitely was not keeping up with the demand then. And only now, when they've reached a kind of a scale in the production, they have to make the vehicles a little bit less expensive. So let's see. And one more piece of news. Apparently, Bill Ackman is considering taking Twitter back to being a public company. So that made me a little bit giggle at the beginning of today, because obviously Ackman always needs to insert himself in plenty of interesting stories. And that being said, I always hear and see so much hate about the guy on obviously Twitter/X and everywhere. But I mean, the guy reports to himself and his shareholders, right? So you always have to take it from that perspective, because frankly, as an investor, like, he's very solid guy. So, very concentrated portfolio with some very reliable companies that are, like a very well-run companies, cash-flowing businesses. And his 5-year performance, 192%, that's basically almost 4x what Warren Buffett did, S&P did. Like, the guy's freaking pro. I mean, depending on, whichever way you slice it, like, the guy's very competent. So, definitely listen to what he says. Just take it with a big boulder of salt, and always interpret. You have to understand how to interpret it, right? Because again, like, the guy does what's best for himself, his shareholders. So always take it from that angle. And one small, again, tidbit of funny information almost. Jamie Dimon is predicting 3.5-day work week for next generation thanks to AI, according to Bloomberg. So I don't know about you, but if I was about to work like 4 days a week, I would be bored to death, to be honest. So I don't know, but I cannot really foresee a future like that. I mean, there is always going to be someone to outwork you. So, working less, that's just a recipe for disaster. There is always more we can do. So that's not the future I'm signing up for, to be honest. And another piece of news, Microsoft says NVIDIA GPUs are the best options for AI, but AMD is also making a compelling offerings. So if you follow me on Twitter, you probably know that for me, it's AMD is the pick of the day. And it's actually a little bit against my usual principle that I intend to invest in kind of like the market leaders, the most dominant company, because winners usually keep winning. But I don't think that's going to necessarily be the case in the big battle of NVIDIA, AMD, and others. Mainly because AMD has plenty to offer, And maybe let me go a little bit into technicals, but basically Nvidia at the moment has super high margins. They are doing the top of the class AI chips, the H100s, if I remember the name correctly. So, they're the best. They deserve the insane margins. All's fine. That being said, AMD is doing things a little bit differently. They're basically do the chip architecture from chiplets, which are basically like a smaller units, right? That are pieced together. And that means, when you are producing those chips, if you are making like this high-end NVIDIA chip and something is off, you just need to throw away the whole chip, right? So in the chip manufacturer, everything needs to be so extremely precise that there is a certain portion of the chips that just thrown away because they don't work as intended, or they are just basically like a downgraded to like the lesser tier. AMD is basically how they are chaining the chiplets together. It means that they can just basically replace that one part of the whole chip. And AMD has been doing this for quite a number of years. So I would say they are better positioned for the long term, right? Again, talking about 3-5 year horizon. And that's basically what this is about, right? Because when I'm talking semiconductors, I think like everyone should have some part of a semiconductor value chain basically in their portfolio, because it's one of the mega trends of the decade, right? So, computing, there's more and more information, and we produce more information, and we have to make sense of all of those information, right? So we'll need more compute regardless. And of course, whether you go with NVIDIA, AMD, some of the, like the TSMC, the ASML, that obviously we can get into nitty-gritty, what could be that particular pick for you, but you should have some. I mean, simple as that. And then maybe, I think it's the last story for today. Europe, September CPI at 4.3% year over year, was estimated 4.5. So after basically severely wounding the inflation in the US, Europe is also basically now to 2-year low. And I mean, it cannot get like a steeper than this, right? So basically, we are really entering the last inning for inflation. And now we should really start to be worried about the other part, right? Because we don't want deflation either. That wouldn't be really nice. So let's just hope that we haven't overshoot. So that's a little bit my concern with obviously Fed, Jerome Powell. They are always like half a year, 9 months late, right? At first it was, hey, there is no inflation. That's just a transitory, right? It was that word of the day. If you would look, like a two years ago, well, it wasn't really transitory, right? It took several rate hikes to kill it. And now basically the Fed is saying that, hey, the inflation is not conquered yet. We have to either keep hiking or basically keep the rates elevated. And, when there is some uptake with the, unemployment or something like that, I think the Fed might come and start cutting those rates fast when they see any type of problem. So I just hope that, the economy is strong and there is that ideal scenario, but I'm not betting on it, right? So, in this type of the market, we have to be a little bit, cautious, nimble, still have some money on the sidelines. That's kind of my personal strategy. Nice and easy, keep buying, but at the same time, be ready because opportunities might come, right? So, definitely it's not the type of the market you want to be out of, but at the same time, let's really keep our hands on the pulse of the market. So hope you enjoyed it today. I hope you learned something. And yeah, let me know in the comments if you would like to see more of this. Thanks.